Welcome back. Now, consumers have hit the brakes when it comes to making big purchases like cars. That's as they struggle to make ends meet on the back of high interest rates. And this kind of environment has weighed on Motus. We're now joined by the company's CEO, Osman Arbee. Thank you so much for your time, Osman. Now, of course, the first thing that jumped out at me was the double-digit growth that we saw in revenue, where we saw that growth disappearing all the way to the bottom line, where we saw a reduction in your diluted headline earnings per share of about 26%. Paint a picture for me of that story.
Okay, so firstly, our turnover has enjoyed the benefit of inflation in South Africa, a bit of inflation in the UK, and then our aftermarket parts in the UK was only included for 3 months last year, so it's 6 months this year. So yes, the turnover grew by 11%, and you take the acquisition out, it still grew by 7%. So that's that side of it. And then you go to the EBITDA. The EBITDA has grown by 13%. Again, you take out the acquisition, we're about 7 or 8% growth. So up to that stage, we're all okay. And then the operating income grew by 1%, so you call it flat.
Yeah.
What happened to Motus is that Motus borrowed money for the acquisition. We borrowed money for stocks that we've got. We've got a bit of excess stock. And then our car rental fleet went up significantly. And as a result, the interest bill has ballooned, and that's caused the problem for the headline earnings. But from a trading point of view, we're in a comfortable position. The interest bill we're going to bring down by June, which we hope we will. And so if you're looking forward, the interest bill will come down.
Yeah.
Trading is tough, but that's the nature of South Africa, isn't it?
Yeah, of course. You talk about it because obviously one of the reasons for the increased debt, it was also the working capital. And I'm wondering if you are starting to see some relief on that, and if we could see a significant relief for the second half of your financial year.
So for the first half, we've reduced our stock by about 2.6 billion rand. And in the second half, we'll do something similar. And obviously, we'll use that proceeds to reduce our interest-bearing debt, which is either in creditors or with debt. So, I think we've got all the plans in play to continue with the reduction that we started in July last year. And by July this year, I think we should be in a much better space with our debt and our overstocking situation.
All right. I mean, just looking at the competitive landscape, what is that saying? I mean, and also what has the impact of that been on your margins?
Okay, so I think what we got to understand that the South African consumer is very fragile. High interest rates, not sure of their jobs, the power outages, the usual stuff that we normally talk about. So what has happened, because we've got a fragile consumer, 70% of the sales of vehicles in South Africa are below 650,000 or 700,000 rand. So you can see how we've shrunk.
Yeah.
Then if you go to below 250,000, there are only 5 cars in the market that you can buy below 230 or 240,000 rand, which is 3 Suzukis, 1 Renault, and 1 Toyota. So you can see how the market is shrinking to cheaper, affordable vehicles, not because people love them, it's because that's all they can afford with the high interest rates, the cost of buying a car. And remember, our currency is not helping either. Our weak currency, a lot of the cars are imported, and we buy these cars in foreign currency. So we're in a perfect storm at the moment, and we're going to be in a perfect storm for the next 6 or 8 months. There'll only be light at the end of tunnel if we get interest rates dropping slightly, people feel more comfortable with their jobs, the economy growing and creating new work, new employees buy new cars. So we're about 12 months away from any light at the end of this tunnel. I think the next 12 months are going to be tough. But obviously, being South Africans, we're very agile, we're resilient, and we will come back in 12 months' time.
Yeah, and I mean, while we're still waiting for that, because also now the interest rate cuts that were expected seem that they're going to be taking longer. They're going to come out later than what markets had anticipated. Now, I'm wondering then, in the meantime, what is Motus doing to try and protect that revenue and those margins?
So firstly, if you repay your debt and you reduce your stock, that means we automatically will reduce the interest bill and the debt. And obviously, we're looking at our operational efficiencies to make sure that we run an efficient business and we're not extravagant with costs. And Obviously, we're getting assistance from the OEMs, which is the original equipment manufacturers. They would support us with margins, assist us with money on the bonnet, and make their cars more saleable. So we are getting assistance from them as well. Our people are incentivized to sell more cars, reduce the stock, and the recipe has worked for the last couple of months, and long may it last, that continues, and in a year's time, we should be in a better place.
Yeah. I mean, obviously, I know that most of your business is in South Africa, but of course, you do have your presence in other markets, including the UK and Australia. And I mean, even there, we've heard that consumer confidence is low. And, you know, yeah, things are very hard there as well. So is that translating to your operations there, or are you seeing some resilience?
So we're fortunate in the sense that in the UK, we're big in the commercial trucking business. And that business is feeling less of the impact because they have to move their goods on trucks. They don't move their goods on trains. So that business is still doing okay. The aftermarket parts is doing well because people have to repair their cars. So they need air filters, oil filters, all that kind of thing. And the car park in the UK is 40 million cars. So that business is quite resilient. And then Australia is doing quite well at the moment because they had a backlog of orders and cars. Since December last year, the cars have arrived. So by March, April, we'll be still doing well, delivering all those cars. I think they'll start moderating from May onwards. But at the moment, Australia business is doing well for Motus. UK, 80% of the business is doing well. The 20% is the passenger business that's going through a bit of a difficult time. But they're not as difficult as South Africa, where we're really battling with high interest rates, weak currency, and high unemployment.
All right. Well, thank you so much for your time and giving us insights on those numbers that we saw coming out of Motus earlier on, Osman. That was the CEO of Motus, Osman Arbee.